What's going on, everyone? My name is Brian Litrian and welcome to my YouTube channel. If you're new here, don't forget to hit the subscribe button down below. Today is Sunday, September 6, 2020. I meant to release a video a few days ago, but this week was filled with some huge moves in the market and I really needed to be focused. The week started off extremely bullish, and I'm going to show you guys what signs you can look out for to spot A+ trades. Following a huge push up early in the week, we ended with a major sell-off on Thursday and Friday, which was easily spotted. Like with most of my content, I want you guys to learn how you can come up with your own trade ideas, as well as know what to look for in anticipation of huge moves. On Monday, I posted on my Instagram stories that I noticed a huge block order into the ass on the ES futures for 631 contracts. Now, normally you wouldn't see such a huge block order out of the blue unless a big move is coming. The trade took place at $3,505 during the afternoon session. So I decided to keep track of how price moved around this level into the next day. Here's a screenshot on September 1st, 2020, which is the day right after. On the tape, we'll see a flurry of block orders that came in one after the other. This is printed within seconds of each other if you look right here. For those of you that don't know, one contract on the ES is the equivalent of $50 times whatever price the SPXY is trading at. So in this case, 500 block orders is the equivalent to $50 times 3,514. Times 500, which is about $88 million. Now, seeing this transaction happening isn't a reason by itself to take a trade. It was the combination of a technical pattern that was forming on the chart that really had me excited. Looking at the ES 5-minute chart, we see the symmetrical triangle that was forming on Tuesday right here. If we draw the pattern out, let's just draw the trend lines out pretty quickly just so we have a rough idea of what I was looking at. This pattern was forming, and like I said, I was taking note of this level because on Monday that's where I saw the first block order come in, which was at 3505, and at 215 right here, this is when the block orders started to print. We can see it in the volume right here. Now, I use NinjaTrader to trade futures, and here's a screenshot of what the point of control looked like at the time. That's this level right here. This is the point of control on Monday, and this is the point of control on Tuesday. Right here at 215 is where we saw the huge order coming in. The point of control is confirmation of where the majority of volume was traded by this price. The risk reward was amazing here, as there wasn't any way to really tell how high the market was going to go. But as with most good trades, you should be focused on what level you're going to risk off of first. And in this case, it would have been just below the point of control, or to be safer, below the triangle. Which means in this case, you would have been risking about 5 points. To gain potentially 30 if you were looking to close at the breakdown of the following morning open. Now, while this trade is following the overall trend of the current market, which is up, let's take a step back for a second and stop to think about the overall psychology of the market participants up here. On August 24th, we gapped up over the February all-time high right before the coronavirus pandemic outbreak. And as you can see, we started to just melt up. Whenever we break out of a key level, it's only a matter of time before we either get a pullback, a retest, retracement, or exhaustion phase, whatever you want to call it. So you have to start thinking of either taking profit or hedging your position. Before this big drop, we're talking about the smallest put position in the SPY in over a decade. On top of that, we're dealing with the most amount of traders and inexperienced market participants of probably all time. That translates to a lot of scared money. And we know out of the four main emotions that move the market, fear is the most aggressive one. With everyone being so bullish with an abnormal lack on hedging, and at the same time, after such a historical breakout, you can form the idea that a sell-off was going to be strong and fast. What I started to notice is that even though the market continued to climb over the past couple weeks, the VIX was starting to slow down and contract. It slowly started forming divergence with the SPY before actually giving a major signal to short the market on Wednesday, September 2nd, right here. If we just zoom in for a second, we can see the SPY. This was the day that the SPY actually, this is August 24th when the SPY actually gapped over the previous all-time high resistance. And as you can see, the SPY continued to climb, and at the same time the VIX was contracting and it continued to push up while the SPY was putting in new highs. That's when I started thinking that a big short was coming. As we look at the intraday comparison between the SPY, the Qs, the VIX, and the UVXY, there's something very important I want you guys to take note of. A rising VIX means traders are expecting a huge move. And when you see price action like what happened here on Wednesday, in addition to the aforementioned inevitable pullback, you can set yourself up for a beautiful short. If you remember from my first video, a bearish divergence between the Qs and the SPY is currently not something to overlook. Even though we had a beautiful gap up on Tuesday, the ADD gapped down. And that was the first red flag to me. We were nearing the end of this push phase in the market. I grabbed SPY puts early for an opening drive scalp, but closed the position quickly when I realized it didn't look like the market was going to sell off and we weren't really breaking the pre-market levels. But to be honest, I was thrown off by how strong the SPY continued to run. I sat out majority of the day because there were just way too many red flags for me to continue in this bullish phase. The ADD divergence was one, but the fact that the Qs were struggling to keep up with the SPY was another. If we look at 12 in the afternoon, just as the SPY was putting in a new high a day, we see that the Qs had just gotten back over VWAP. If we just trend it out right here, we'll see that this is the equivalent to what was going on. And I don't usually like to see action like that. The tech has been what's been driving the SPY up. So when tech is weak, I already start to take my foot off the gas when it comes to bullish trades. But this is when things started to really look crazy to me. The fact that the SPY was getting so far away from VWAP and it was just putting in a new high a day after new high a day after new high a day. And I looked around at some of the high beta companies like Apple, and it was struggling. Then I looked at Amazon. Amazon was also struggling. Took a look at I took a look at BA and it wasn't doing so great either. I mean, it was practically just a consolidation day for Boeing. Tesla wasn't having the greatest day either. Looking at some of the banks like JP Morgan was also consolidating. And lastly, Citibank, it wasn't really going anywhere. Again, didn't really justify the movement in the SPY. I had to keep in mind though the huge block trades that happened in the ES from the previous day. It really had me curious because I wasn't spotting any huge sell orders coming in during this whole time, so it didn't appear as if any of the big institutions were taking profits. At least if they were, they weren't doing it in such large size in which they bought the previous couple days. At the start of power hour, I did start to get some puts expecting some sort of retracement to VWAP, which never happened. But at this point, I already made up my mind it was going to be a swing trade, because at this point I had already made up my mind that the risk reward was extremely great up here. Not to mention the fact that from the larger time frame, we knew some sort of pullback was coming. Just looking at the SPY and the ADD side by side, I want you guys to really understand something here. This is when the block orders were coming in on the futures the previous day. The 500, the 500, the 500, that all happened in a few seconds within each other. And then we had this massive gap up. And at the same time, the ADD gap down after the ADD was running up the whole day. This really didn't make sense, especially the fact that it just sold off for the whole morning and then we continued to go. Usually whenever I see that type of action, it doesn't surprise me when the following day is a major sell-off. Looking back at Wednesday and comparing the differences between the VIX and the SPY again, this is what I'm talking about. As the SPY is continuing to go up, just pay attention to this price action on the VIX. We have a double top right here from here to here, but then as the SPY just went sort of, we'll call it parabolic, but not really. This is what happened with the VIX. This is not really normal, and this is the type of price action that means that traders are expecting there to be a very huge violent move coming up very soon. And keep in mind that the futures traders that bought those contracts at 215 the previous day, they were currently up over 75 points at this time, which is about $3,700 in profit per contract from this symmetrical triangle breakout that happened yesterday. Let's just move this futures chart ahead and see what happened here. So we already know after just looking at the SPY that the Wednesday was when we had this nice push. But if we pay attention to the after hours activity on the futures, we'll see that selling continued into Thursday morning. We were never able to get back up at this level, and the fact that we started pulling away from VWAP, and this seemed to be the last attempt for bulls to reclaim VWAP before the open. I ended up being very excited because I had a really strong feeling that this was finally going to be the pullback that we were expecting. I was in the SPY 354 puts, which would be right here was my strike. So feeling good, I went on Instagram before the market opened and briefly shared how today was looking like the pullback we expected.
What's going on, guys? Today we're getting a little bit of a pullback in the broader markets. And I thought about making a YouTube video for later today, but that'll probably end up taking too long. So I figured I'd just put some information out there on Instagram very quickly on how you can protect yourself in situations like this. If you guys saw my first YouTube video, I mentioned on days where you have the SPY running aggressively like this, you shouldn't have the UVXY and the VIX also increasing, as well as the SP. If you guys have been following what I posted earlier this week, you can see what I was posting in regards to how I was reading the futures. I might make a YouTube video about that and how I was able to see a move like this happening.
Now at that time, I completely underestimated how deep we would sell off. That Instagram video is showing the SPY before the market opened right around here. I was expecting a pullback to this consolidation zone. I did not expect this follow through in the same day. I didn't see any huge block orders coming into the ES, which was also throwing me off slightly. It wasn't until 10:47 I started to see the 500 block orders coming in, coincidentally within the same range we were looking at before, the 3505, the 3515 area. That area finally started to show up on the tape, and this is exactly what I was looking for. This is how I knew that those same sellers, or at least sellers of that size, finally started to close out some positions. These were going into the bid. But this wasn't just a slight pullback, it was a full-blown retracement to the March highs. It only took 2 days to wipe out the whole 2 weeks of SPY gains, and that's one of the biggest reasons I love days when the market sells off like this, especially when being able to spot it before it actually happens. There were signs of follow through on Friday, because on Thursday the SPY struggled to put in a proper retracement, which meant the heavy selling was not finished. This is TradingView, which is just another platform I use for charting. I had it up because I wanted to see where the 2-day anchored VWAP was. I'm going to go over the anchored VWAP in another video. Now, I didn't trade on Friday, but I did notice that there was some short covering in the morning, and possibly early dip buyers right before this resistance right here. And let's put up the 2-day anchored VWAP so you guys can see what I'm talking about. So it was interesting that the SPY did try to look like it was going to fully recover, but it got rejected pretty quickly. And then the next leg down happened just as aggressive. And by the time the SPY had retraced all the way back down to this 339 level, we started to get some really nice dip buy opportunities on stocks like Amazon, which came right down to its 50 SMA. Square did the same thing, came right down to its 50 SMA. Microsoft also came right down to its 50-day SMA. Even the Qs came close to the 50 SMA also. Now I want to wrap this video up by showing you guys how some of the options moved on the SPY. What we're looking at is the SPY on the left and the contract in which I traded, which was the 354 put expiring on Friday. I got these on Wednesday around this level here. My PT essentially was here on the trade. And this is what I mean by I completely underestimated how much power was behind it. I was happy to take 100% return. Like I said, I started loading in here. I started loading in here. It was amazing to see that these contracts did hit a low of 70 cents. So I was down, I think my average fill, I was down at one point about 20% on the position, but I knew what I stood to gain. Did not know it was going to be this large again. Something that I'm making sure to put down in the records as well as in this video. I mean, we'll call it, even with an average fill of, we'll say $100 or $96 or whatever, the full range of this move, not to say that anybody would have really caught this, was close to 2,000%. If you just got them at the end of the day, you're looking at over 2,500%. Call it 2,000%. We'll just take the average of the two. You're talking about $100 turning into $2,000 in 2 days, a day and a half practically, which is nuts. The pullback wasn't necessarily too deep, so it would have been something which you could have held, because again, the SPY never really, got back over VWAP. Even if you held it into Friday, which I would not encourage, considering that they expired the same day. It would have been smarter to look at the following week expirations, Monday or Wednesday. So let's actually take a look at the 350, which also expired the same day. I'm looking at 350 now because this was if the consolidation was to break, where I was thinking we probably would have, which probably would have been another good strike to go in the money. They also had extremely high open interest during this consolidation phase. Actually, yeah, let's mention that consolidation. Let me just jump back to this here, because it's something that I definitely need to improve on. If I'm not in the day before something happens, I usually don't maximize on the following day, when I need to start taking note that this is confirmation. The fact that we gapped down was actually confirmation and consolidated below VWAP and broke the opening range at 10 a.m. This is actually a trade in itself, which one can argue is probably even the smarter trade than the one I took the day before. Again, I had a lot of reasons, but this is actually an A+ trade in itself right here. The option didn't do much. So yeah, wrong strike. Sorry, let's go back to this. Is this strike here. The option didn't necessarily move much initially. Yeah, from 70% to here, that's already a 60%. You're already 60% up. But this is a whole 30 minutes of price action that you can decide and evaluate. And even if you didn't really have this thesis from the day before or the trade idea from the day before, this is plenty time for you to be spending in the morning to analyze what's the best trade for you to take into the next day if you're looking for a swing setup or even for an intraday trade. And this is just beautiful. This consolidation here is all you can ask for below VWAP. Again, remember the futures we were selling off the entire time. Let me actually I'll turn pre-market data on for you guys. Yeah, so hopefully this helps. This is what we're looking at. This is just you know, not pretty for bulls. It's a nice trade here. Yeah, the fill is not going to be $1.70, but even at $1.45, it still has a lot of upside room, and it's something to take note of. If we look at the 350s, same day expiration, these went from 30 cents the day before. By Friday, these were up almost 5,000%, which is just insane. Looking at the consolidation time here, let's see what they were going for. We'll split the difference and use VWAP. We'll call it 45 cents or so. Let's just say your average fill is 40, 46, 45. Even from here to here, that's over 1,000% gain, and you're talking about you're just capitalizing on this move right here. Let's take a look at, this is the 348. These are even cheaper. I mean, these are going for 21 cents. Not necessarily a good idea, but if you want to talk about just hedging a position, you could have thrown just $200 or something. I mean, it depends on your size, but even $200 in this means you're grabbing a few of these contracts, and from here to here, your $200 is going up 2,000%. That's a pretty good way you want to think about how to hedge, because if you're wrong, then you just lose your $200, and it means your long positions would have continued to go up in profit. A safer contract might have been, this is the 350 put, so I'm going a little further out. So initially we started at the 354s. Looking at the 350s, this contract now expires on Friday. So on Wednesday or even Thursday, when you got the confirmation of the sell-off happening, you could have been looking at these contracts. You got them around the same time in which I did. They would have been going for like $1.50. They hit a low of there of $1.40, and as you can see, during the same time here, it was consolidating. So if you had an average price of $1.85, we'll call it, there was still a lot of money to be made, and these contracts expire a week later. So this is 200 something percent, or $5.50, $550 in profit per contract, you know, from this initial leg up. But then as you can see, it had plenty follow through even into the following day. If we look at the full range of that, it's over 700%, which is a beautiful move in itself. Again, these contracts expire the following Friday, so it's safer to hold and swing these, not to mention the fact that you would have already been in the money the entire time. So everything after this is pretty much going to be accruing in intrinsic value the more the SPY continue to sell off, which is why you had this next explosive action right here. And lastly, let's just check out, these are the this is the $340 strike. Using 340 because we know 399, we'll call it, was the all-time high from March. So let's just say you saw this short coming. This was your confirmation right here, and you're thinking you're swinging this for the full retracement. This contract was only going for $1.70, $1.80 when I was looking at it. And if you waited the following day, again, which would have been Thursday, you can grab these for, call it, $2. And from this move here, this would have been 180% gain. But you wouldn't have been looking at this. This would have been the smarter contract to swing because it's expiring 2 weeks out at this point, and you're talking about over close to 500% gain. So this is turning $2 into 10. I really hope this video helped you guys. I mean, this was something that you want to be able to spot, and even if you're long in the market, you want to be able to think about it. How can you protect your long positions? Because capitalizing on a hedge such as this is just, it's too good of an opportunity to pass up. Imagine if you're up $10,000 in the past couple weeks and you've been long Apple, we'll call it, from, you know, this area. There's no reason for you to just suffer through such a pullback, potentially erasing all of your profits. You can either start looking to scale out up here or just hedge the positions. And hedging the positions means take a portion of your profits, get some puts that are way out the money. If they expire worthless, they expire worthless. At the end of the day, you're risking, call it, $200, $300, $400, $500 out of your $10,000 that you made, possibly in calls or whatever the particular. I mean, everybody's situation is different. I just really wanted to open you guys up to the way you can be able to spot this, type of opportunity that arises in the market pretty much every time we have a major push phase in any direction. We're always going to get some sort of exhaustion phase, which is what this is here. Whether we're going to get follow through to the downside into next week, that's something we'll have to see. Tomorrow the market is closed. I'm going to do my analysis. I don't know if I'll make a video in it, but I'll try to. We'll find out if this was a dip buy opportunity or if we'll continue to get some downside selling pressure. Leave a comment down below if you enjoyed this video. Don't forget to like it. Don't forget to subscribe. Let me know if you have any questions down below and I'll try to get back to you guys. But until the next one, thanks for watching.